How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was recorded on February 9th, 2021. So we are taking a look at gold here, and this data comes as price was dropping here on the weekly chart. So what was taking place? Well, we see that recently we had price in very aggressive territory right here back in early January. Back in early January was up here, okay? And they've since taken profits on those long positions, reducing them from 313 down to 307, and then they bumped it back up with the rally, and now we're down to 309. So the bottom line is, over time we've declined from the low 340s down to 309. At the same time, shorts went from 72 to 57. So they're not increasing shorts, they're profit taking on longs. This is something we've been talking about for quite some time. Now, are they going to keep price down at these lows? That's the question. We are looking on the lower time frames for the sign that price is going to break up to the upside. So we are going to continue watching for that and seeing if that is indeed what will happen. Otherwise, if that does not happen, we will see more downside on this one, but it will be limited, at least for the time being, because we have massive demand sitting here. Okay, so let's now take a look at what we have going on with oil. So oil, look at that sucker rally. Can you imagine? Can you imagine? Look at the strength in that one. Well, we can't imagine it because we called it down here in the 20s. We knew that it was going to rally and come to at least up here the 55s. And so that's a rally from $20 to 55. That's a massive, massive increase. That's more than double. So almost triple. So that one was amazing. That forecast was amazing, including the slight speed bump to the downside and then continuation to the upside. All based on the COT report, but mostly based on the Sherlock system. The Sherlock system that we applied to the charts, and based on what was taking place on all the time frames, the multiple time frame analysis that we did, it had suggested that a move up to the 55s was what was about to take place, and that's exactly what took place. So this big rally up here on the weekly chart is represented by the big increase in long positions, 675 to 694,000. That's a big increase. At the same time, they also did increase their shorts from 176 to 180. Now that's not a massive increase in shorts, but we've been seeing this, steadily increase over time. All right, we've gone from contract expirations December 22nd to 139,000 with shorts, and 165, 170, 180. So we're pretty up there. Now we've been calling for a reversal for quite some time. The Sherlock system had suggested that the rally was going to take place from here to here, and then in time momentum would shift over and drop like that. So this is what we're waiting for. This is what we're watching for, and we're waiting for signs of that. So the increase in short positions on oil would definitely suggest that that is possibly going to take place, but we need to wait for more evidence to build for that. Okay, now we look at the dollar. What do we see with the dollar? They didn't do anything with their positions, really. They took some of their short positions off, which increased their long exposure from 34 to 35%, but they're still short biased. Okay, there's a clear short bias here. As well as when we look at net positions, we can see that they are definitely with a short bias. So nothing's really shifted there. They are short. We have demand in play. So we can't short while demand is in play. We'll let either the demand get taken out, or we'll let supply come into play. If either one of those take place, then we will have definite direction with what to do with positions. But so far this is looking pretty good. We got the Aussie now, and we see that the Aussie has been pretty much neutral. Look at that, okay, for quite some time. Yes, it started to get a tinge of bearishness, but it's back to neutral, 50-50, right? 50-50. You look at net positions, it's not really showing us anything. Now, we knew that price was going to react from this area of demand, and that's what took place. But we also know that price is reacting from supply as well. So now it's a battle between supply and demand, and which one is going to overcome. The data is not really showing us anything, but if we had to look deep, we would see that short positions are more aggressive than longs at this point. So does that mean we're going to see price switch over? Potentially, but there's a lot more factors that we'd have to take into consideration before coming to any type of conclusion. This one's a difficult chart to read simply because of the where we are situated with the higher time frames, where price is reacting from, and the lack of direction from the institutions looking at the positions. So we will be getting a clearer sign soon, but we need to let price play out for now. US CAD, take a look. We see that short positions are aggressive. Okay, and what about longs? Cooled off. Ever since contract expirations, they cooled off their long positions. So they're not interested in longer period longs, and we've known that. And we had a short signal here to go short and cover here. That worked out perfectly. So now what is going to be the move? Are we going to get a retracement up for a continuation, or is price just going to continue lower? So that is the question. We do see that there is a bearish sentiment here, and if we look at net positions, we can also see that there's bearishness here. So we know over time that price will decline, and we have targets lower on the chart. But if it does rally up, we will be looking for the signals to get in short, because there will be definitely price playing out in a certain way that will allow us to identify the exact reversal zone, and then we'll take entry into a short position from there. US Swiss franc, again, longs are cooled off, shorts are aggressive, the sentiment is bearish, and net positions are bearish, but we have demand in play. So we can't just go short when demand's in play. It has to be either removed, or we have to have supply in play. We have a nice area of supply right up here. If price gets up there, it'll be a great area to get in short. So we'll continue to watch as this one unfolds. Euro US dollar. So this one we have longs very aggressive. Shorts starting to become a little bit more aggressive, okay, since the cooled off numbers down here, low 70s. And we can see that price reacted from supply as we had suspected to the downside. And this past week we saw price just stall on the way down, but we are suspecting that more downside is coming on this one. Okay, longer term we're looking at more upside. A pound US dollar, this one's been rallying quite nicely. We called it down here for our long trade with targets up here in the 140s. This is so far 1100 pip winner. So beautiful. Okay, so far this is a 1100 pip winner on pound US dollar. Called perfectly the exact area where price was going to reverse. Price was up here when we said that this is the area of buying, and the target being up here, and that's exactly what has been taking place. So we see longs increase from 53 to 60, which is great. This is why price is rallying up. Total size 99, still low, and we are bullish obviously, and net positions bullish, and this can continue more because it's not strong enough. You know, you look at the coloration here, it's a light green. This can go into the dark greens. All right, so it still has room for the institutions to add. So looking really good on that one. US dollar, Japanese yen, longs are cooled off, shorts are aggressive. Definitely a bearish bias can be seen here, reacting from demand, which we're not surprised about. At some point this is going to turn over. Interesting thing is, and I've made mention of this in the observation journals, so members can go take a look, is what's happening with the yen pairs. Okay, we might see more upside on this than than what we originally had thought. Price can come up here, maybe even higher, based on what we're seeing on the yen pairs. So just want to point that out to you. Last but not least, Kiwi dollar. Kiwi reached its upside target, the weekly target up here that we placed. That's been hit. We call this from down here. The whole move up, it happened very quick with big wicks to the downside, and that was coronavirus related. We take a look here at the longs. They're very aggressive, and shorts are starting to become a little bit more aggressive. Does that mean it's going to pull down? There's a possibility of that. A possibility. We are bullish, but I do want to point out that lately, just a little bit more neutral in their positions. So just be aware of that. There might be a turn to the downside off this weekly area of supply. We are watching that, but we are interested in engaging in positions when the signals have been presented to us. Alright, ladies and gents, that is your CFTC report for February 9, 2021. If you like the videos, you like the analysis, please like and share, even leave some comments down below. I'd like to do some new videos where I will apply the Sherlock analysis process to different indexes, or maybe some stocks that you want to take a look at, or futures contracts. So leave some comments down below. Let me know what you would be interested in seeing some Sherlock analysis be applied to, and I'll do some videos in the future with some of your suggestions. Alright, you can reach us at www.whiteoakfx.com if you have any questions. Until next time, take care.